in periods like this, John, what you've really got to do is you got to look for stability. And when I say stability, I'm really talking about finding value companies that have a strong potential of holding their value kind of through thick and thin. And when you have those kinds of portfolios, things work out not too badly. You noticed this morning that that the Dow was up nicely. Everybody else is down, but the Dow was up. Well, that's where in the States, if you're going for value stocks, that is one of the great places to go. When I'm looking for value, I have a kind of a three-step approach. The first thing I do is I look for a strong balance sheet, okay, because I like the company to be bulletproof. Secondly, I like the price to book to be down and nice and low. In other words, these are companies that are kind of overlooked and pushed aside, like a company like a Power Corp would fit in there. Thirdly, I do like a dividend, of course, and the better. But I also like to find a company that has good upside potential as we measure it. Now, it isn't that potential is going to be realized, John. That isn't the issue. But the point is that if you buy some of these high-tech stocks where the intrinsic value is actually below the current price, then everything has to work out. If you buy a company that's well below its intrinsic value and very, very cheap on a price to book, not much has to work out before your portfolio will be well served.